I want to talk about the different legal structures and entities that are available to a small business owner. You know, someone who they own some equipment, X-ray machines, printers and computers, maybe a building, and of course they're operating. So, we've got a lot of options on the menu. There's S corporations, there's LLCs, there's just sole proprietors, partnerships. Talk about what a doctor, what a small business owner might do to protect himself and to operate most effectively.
There's some wonderful entity vehicles that are available in our legal structure today. The LLC is the most common of those vehicles. And then there's also an S Corp or an S Corporation. And then you mentioned sole proprietorships. That's kind of at the far end of entities. Most people today are looking at the LLC format, and it offers a wonderful array of advantages in terms of incorporation. Most LLC statutes in each state carry with them the flexibility that partnerships typically carried with them in the past. So I don't have to be an expert in terms of managing a business or understanding when to have a board meeting or how to create minutes in order to be able to function in the LLC format. It affords me the flexibility of a partnership while providing at the same time the legal limited liability that a corporation traditionally did. An S corporation is a standard corporation, standard corporate format that carries with it the sub-S election option, which allows you some favorable tax treatment while at the same time corporate limited liability. You can also make that sub-S election in the LLC format, so there's no difference between the two in that way. A sub-S corporation has a limit of 75 shareholders or less. If I have more than that, then I can't avail myself of that sub-S format. Most small to medium-sized businesses are never going to touch that limit. Mm-hmm. It provides a great opportunity for them to get corporate protection. It carries with it, though, additional formalities. You have the traditional structure of a corporation in terms of a board and executive officers and shareholders and the formalities that exist with all of those. Most people in a sub-S corporation are wearing multiple hats in terms of their responsibilities in the corporation. That can be complex for some. For others, it's exactly what they're looking for, and they want that kind of structure and stability, and they're familiar with that format. Those are the individuals then that need to be looking at the sub-S format.
And at what point am I, looking at taking other assets that I've got and creating other entities?
That's a great question. If you have significant equipment that you own or that you have an ownership interest in, it's not securitized through someone else, but you have ownership of it, you definitely want to be creating a separate entity that you can then lease that equipment to another entity of which you also have ownership. Why would you do that? The most significant reason is for tax purposes. It allows you the opportunity to expense out and deduct the lease cost for the one entity while at the same time availing yourself of the depreciation benefits in the other entity. What's the other reason that you do that? Asset protection. It allows you to separate your income producing stream entity over here from your asset holding entity over here. So in the event that liability touches one or the other, there isn't the opportunity to then acquire all of the assets of the entity. It creates a layer, a shield that most small business owners really enjoy.